Hello. How's everybody doing? This is 50 Pips rocking and rolling 21st of June 2015. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the side, understanding that we're just performing some technical analysis in a learning context. So I hope everybody's had an awesome weekend and ready for the week ahead. Now, again, going into this week, I could go on and look through the data calendar and say that we got a bunch of PMIs coming out on Tuesday, with some speakers. We could say we have a German IFO on Wednesday. We could even go as far as talking about unemployment claims in the US on Thursday or trade balance out of New Zealand on Friday, but really that's all beside the point because it's all and only, at least in terms of short-term headline risk, about Greece, right? So you have to keep in mind there's an awful lot of headline risk. We've got, we're going to go into this. We have all these meetings on Monday, the Eurogroup meeting, etc., and the summit. So that's the press conference for that is scheduled later on in the day. So we'll likely see, Monday will just be a bunch of headline risk. Everybody just trying to do their job, trying to seal the deal. The Greeks putting out something on the wires, the institutions putting something on the wires, journalists putting stuff on the wires. So be cautious. It could be very, very whippy. Okay. Now, the other thing I would just like to caution people is, as we always say, most people, myself included, generally, people wouldn't know what to do or how to trade a data release or something if they knew the data ahead of time most of the time, because it's very tricky to understand how the market will react, at least initially. And with this Euro meeting on Greece, whatever happens, be cautious because you can get a lot of false moves. You can get a lot of people, bigger players, unhedging positions, people putting on big positions. It could be very whippy. So as usual, there's not an awful lot of edge in trying to chase Momo, try to chase news and try to chase headline risk, and far less in this kind of context. Okay. Having said that, what I'm going to do is I'm just going to go through some of the Forex pairs. I'm not going to look at any futures pairs today. For some reason, most people keep on writing to me saying they prefer to focus on the Forex. So that's what we're going to do. If you prefer to focus on the futures or you really like the futures, just send me a note, put a comment in the section, and we'll make sure to go back to looking at the futures. By the way, little service announcement. I would keep a very close eye on the blog for the rest of this week or the beginning of the next week, because I'm going to announce something pretty interesting. I think it's just nothing, no service, nothing crazy. It's just something I'm going to do to pay it forward. So easiest way is just keep an eye on Twitter, or not just subscribe to the blog. You'll get an email a day. At least you'll get the details of what's going on there. So what's happening here? So we got cable, right? Now, cable, not an awful lot's going. It's holding that rotation. Like, if you remember what we said last week, we tried to keep it pretty darn simple, right? And what did we say? Basically, we did this. Instead of making it too complex, right? We're going into the beginning of the week, and we said, keep an eye on the 200 moving average, right? No need to have it on your zone. Just keep an eye on that. Keep an eye on that number, on that level. As long as we hold above, expect this to stay bid, right? If we move back below, then you can see a retracement. You could see some pressure coming on. You could see these lows coming into play. But as long as price does not close back below that 200, very little reason for this to turn around, right? Very little reason for this to turn around, and it'll likely stay bid, right? What happened? We went into the week, started, held quite nicely above, and no looking back. Where does price move? Price is moving really through to the next possible level, right? Try to take stops out at this resistance zone, right? Now, what move is in play? Well, the move that is in play, right, and we've discussed this before, is a fairly pure technical move, right? So regardless of whether you're thinking GPB is catching a bid because of panic on Greece, regardless if whatever, the technicals are fairly clear on this, right? We had an aggressive move back up. We had price retracing back down into a confluence of this 100 DMA and they don't come much purer than this in terms of confluence, and a 50 back of the move. On top of it, giving price a chance to make a higher low. So right now, the move's in play. And what is the move for? The move here is looking for price to continue to move back to the 123 extension, right? And that's the other chart we had up, right? So that's what's in play here. It's a fairly pure move, very, very technical, right? So going into the week, what I would be focused on here is, again, you never know how this could react on Greece. Overall, if things get a bit hairy, you'd expect GPB to continue to catch a bid. We've talked about this for a long time, that structurally we're bullish GPB. If you're talking about rates, we'd expect them to be first to raise rates after the US. Who knows, maybe even before, probably not, but we'll have to see. But right here, so going into the week, as much as last week the bull bear line was that 200 DMA, for me the bull bear line now is those previous highs, right? So as long as we hold above these previous highs, well, then I expect price to continue to trade with a bid tone, continue to try and make its way to the primary target, which is in 161s, pretty much 123 extension of that move, right? And early in the week, should we get back and trade below that 158.10, that 158, then we could see some kind of a healthy correction, right? You could look at this previous resistance to act as support in terms of main level, and oh my god, shocking, right? That lines up with a 50 back move, some more voodoo. So you see, different ways of looking at the market, whether you're looking at pure price action or you're putting fibs on it, right? It's the same kind of level. So that's what I would be focused on going into the week, right? 123 extension zone, mid-range, and if we sell off back into those lows, so what are the levels we got? So we got that mid-range is going to be 158.12s. Low end of the range, 154.90s. Top end of the range, 161.10s. Okay? So that's what we're looking for on cable. So what else is happening? Well, CAD, a lot of people asking me about CAD. It's kind of choppy here. We'll have to see what happens with crude. Our whole hypothesis here is that crude's pretty much bottom for the year, is going to try and rotate back up into the 70s, and CAD may be in the process of forming some kind of a complex top here. Right here, I think is a bit too early to tell. We'll have to see a lot of wheeling and dealing. So as far as CAD's concerned, we call this pretty much the pivotal zone. 125.30s as top end of the range, 119.20s bottom end of the range, and 123.50s pivotal area. Okay, no big change to what we discussed the other times. Aussie, what's going on Aussie? Well, Aussie, no big change, still very boring, and we're going to continue to say the same thing we've been saying since pretty much March or the beginning of the year, really, that we expect this to be trying to put in some kind of a bottom, right? Right now, it's just consolidating in this broad chop zone, and you can make an argument for some kind of a bottom. You can make an argument for this to really fall very aggressively. At the moment, I'm just going to keep it very, very simple. I'm looking at this as a range trade inside this consolidation zone, 77.60s mid-range, 80s top end of the range, 75.30s bottom side of the range. So the only thing that matters for me is the 77.60s as a bull bear line. Daily closes above bid, daily closes below offered, right? That's the way we're looking at it. I don't think there's an awful lot of edge to try and play inside the range. It still looks like it's trying to make a run back at those 80s, but we'll have to see. Now, what else have we got? We got CAD and then Euro. Kiwi and then Euro. What's happening on Kiwi? So Kiwi, this is the latest chart we had, right? And we talked about the fact that price was trying to put in some kind of a bottom here, and you need to respect this kind of action, right? On the rate really decision, etc. And what we were looking at is top end of the range 71s, mid range 70.20s, bottom end of the range 69.40s. Now this is something you really have to pay attention to. Look at what happened. So basically, we've got a a breakdown, right? Very aggressive breakdown, and then a rip. Like pretty much everything when it ripped up, you know, it ripped up about 130 pips. Now, the fact that it retraces that move straight away, that was on the overnight news. You know, we talked about there was a lot of event risk with the overnight news right after the FOMC. Basically, it retraces this complete. So this is not, you know, fairly rare, right? Not doesn't happen all the time, doesn't happen very often. And the fact that this holds to the pip, pretty much, you know, means you really have to pay attention here. So the way I read this, if I'm short here, this is, you know, even if I'm just trailing here, I'm covering, right? Even if I want to add back on any pops and stay aggressive, you know, for me, this is a sign that short term, you know, the Momo's probably not there to the short side. We'll have to see, right? You know, maybe this is going to gap down 5,000 pips or something, right? And I'll look pretty silly. But anyways, I stand by looking at things the way they tend to happen 80% of the time, not 20% of the time, okay? By the way, I do not think it's going to gap down 5,000 pips. I probably think this is going to open relatively stable around here. So we'll have to see what happens. But again, you have to pay attention here. So the fact that on top of it, we rip back up, bam, lower highs, smash down, and it's still holding. Again, you know, shorts might be getting a bit crowded here, might be getting a bit nervous. So the only thing I'm saying here is as long as it holds below the low end of the range, this is very, very heavy, right? Now, if this starts to trade back above and starts to get some Momo, then even if I were looking to sell this aggressively, I would no longer be looking at this. I'd be waiting all the way for the 71. So I think here the risk in terms of velocity of move is to the upside, no longer to the downside, okay? And what's going on Euro? Well, basically, as far as Euro is concerned, we're still stuck inside this trading range. We talked about this range for a long time, and we expected that even though we'll get a lot of wheeling and dealing, we don't expect price to trade aggressively outside of this range or spend a long time outside of this range unless we get something out of Greece, right? So Monday could be the day we break outside. The only thing I would say is keep in mind that to the upside, you've got very, very strong resistance, right? So, you know, from a structural big level, unless we're trading back above this 115.30s, from a daily close perspective, this is still, you know, inside the range. And, you know, in terms of the downside, you know, unless we start to close below the 104s on a daily close, you know, we're still inside this range. And our assumption is that unless something massive happens for Greece, unless something massive happens in the US, we'll probably spend quite a lot of time trading inside this area, inside this range. So again, we're more partial to looking for this to some kind of topping pattern here, even though we may see a bit of spikes to the upside on the news, but it's really all about how we close here. But you know, even after all the dust settles in Greece, I would expect I would expect it to trade somewhere back towards the middle of this range rather than outside of this range, okay? So again, keep in mind an awful lot of event risk. Let's see what happens. Tricky week coming up, but again, with tricky markets, with volatility comes opportunity. As long as you manage your risk, manage your trades, and trade responsibly, that's what we're looking for. We don't want the market to be dead. Okay, have an awesome one. Thanks for listening, and always I appreciate all the comments, all the retweets, all the stuff as ever. And have an awesome one. See you guys soon. Take care, guys. Bye bye.